So guys, we will go ahead and get started. Thank you all for being here today. This is our PBC Industry Resources webinar series with Brandon Padget, Chief Deposit Officer at Union Bank and Trust Company. And he's going to be talking about affordable cannabis banking through union ownership and fintech partnerships. And my team, led by Andrew Dalton, will be helping us move through the webinar and the slides today. If anyone has any questions that you would like to ask Brandon at the end of the conversation, please go ahead and type them in the comments section, and Brandon or myself, we can go through those here at the end of the webinar. So thank you all so much. All right, so quick introduction by me, and then I'll let Brandon introduce himself. We'll go through defining the cannabis banking opportunity. Actually, Brandon will. The problem, high fees and traditional compliance models. The solution, governance, technology, and program design. And we'll finish out with business outcomes. And then, like I said, a little Q&A at the end. Thank you. So who is PBC? What is PBC? So quick intro on me. I'm Josh Radbod, co-founder and CEO of the PBC Conference. PBC is the B2B conference for payments, banking, and compliance in the cannabis industry. Our conference is really our main revenue generator for the company, but we actually have three verticals that many of you may know about. So, of course, the conference, 500 plus person event, bringing together cannabis-friendly financial institutions, operators, compliance professionals, lawyers, government, and more to try to move the industry forward. Our event is always in September of every year in Washington, D.C., which many of you have already been to. Second is our industry resources, where we put together directories that list out the different types of companies that are willing to work with the cannabis industry. We call this our cannabis banking ecosystem, and we publish these directories for free on our website. The third is our PBC certification program, where we've developed a training program for bankers and other professionals that are interested in learning how to do cannabis banking. We have a level 1, level 2, and a PBC certified professional, which Brandon is, of course, a member of. So, and Brandon's, as part of being a PBC CP, it gets to do this webinar series with me and talk about some of the day-to-day challenges that he's worked through in his business. So, in terms of how you can get involved, obviously, join our webinars, listen to professionals like Brandon, and of course, come to the PBC conference. Again, that's every September, 500 plus person event. We bring together the cannabis banking ecosystem. So if you're either in this space or looking to get into this space, PBC is the place to be. So thank you so much, and we'll go ahead and go to the next slide. Brandon, I'll let you do your introduction, my friend, and then I'll let you kind of take the reins from there. Thank you, sir. Oh, you're on mute, my friend.
You know, we only live on Teams and Google Meet and Zoom. You'd think I'd figure the mute out by now. Thank you, Josh, for the introduction to what we're doing here. I won't read all this to you. You guys know how to read, but I'm 23 years in banking, different roles from commercial to cannabis now, right, to private bank. Technically today, I'm the Chief Deposit Officer here at Union Bank and Trust. What does that mean? Anything that moves the money or gathers the money is where my purview is. So you have your retail, your bankers that people walk in and talk to every day, and then you have the treasury, how the money moves, right? That comes in my purview, and how we gather those deposits and how we gather those and sell those solutions that match both the cannabis needs, but the needs of everybody in our banking ecosystem here. So I'm excited to share with you. This is a paper I wrote to become a PBC certified professional, which is awesome and a lot of fun. So I do suggest, if you haven't done it, they do an awesome job of walking you through it and making it easy. But I'm excited to share my paper with you and my learnings and how we operate here, and then answer any questions. We can move to the next slide. So just the core message real quick before I jump into these bullet points. This is cannabis banking is not easy. We all know that. People, whether you're an operator or you're a banker, it's just something that takes a lot of work. The problem isn't on the banking side, not just access to banking, but in my opinion, and talking to clients, it's access to affordable banking, which is what we'll talk about today. My opinion of the paper that I wrote in the paper is fair pricing doesn't mean underpricing risk, right? It doesn't mean that just because you overcharge operators doesn't mean you have good compliance also. It doesn't mean because you undercharge operators, you have bad compliance also, right? It's a mix of figuring out the model that works for you. You know, we think we prove here that compliance, affordability, and profitability all can exist together. And then everybody I talk to in the ecosystem out there, especially at PBC, has some sort of fintech that helps them do this. Fintech doesn't replace your responsibility as a banker. It's a wonderful tool, and I'm going to talk about it in here. But if you think you're going to bring on all the names we know, and that's going to absolve you from work, that is incorrect. But I think it's a win-win, right? Operators can save capital that they can reinvest in businesses. Banks can be compliant and still make money without a short-term fee model, in my opinion. So when we look at this first slide here, we see that there's excessive charges out there, right? Just massive annual fees to these small businesses. And sure, if you're a multi-state operator with lots of backing, with hundreds of thousands of dollars, can be affordable, a burden, but affordable. If you're a mom and pop, you know, or if you're trying to get your first mezzo set up with your own capital, putting your house up, whatever like that, this can be, what's the word I'm looking for? This can shut your operation down, right? It's going to fall hardest on our social equity operators. It's going to make them have to stretch. It's going to make things hard for them. It's going to put them in a survival mode. You know, fee dollars, those fee dollars that they pay to the bank, they can fund payroll, they can fund marketing, they can fund security, inventory. They can hire somebody so this operator gets a Saturday with their kids so they don't burn out and then close the business. Because what do we all want here? We want this business and this ecosystem to grow, to create more jobs in the cannabis space, to make cannabis more everyday accessible and everyday acceptable. You know, it's legalized in a lot of states in some different ways, whether it's, you know, it's hemp derived in all states. It's, you know, medical in some, it's adult use in others. But there's some form of cannabis access in every state that's legal. And we want to make sure that the operators can continue to do that. So next slide, please. The problem, I think you went one too far. All right, my slides are wrong. So the problem of laws and cash and excessive fees. Oh, we're on the right one, sorry. So the first problem, in my opinion, is pricing. Operators often pay for access, but not better service, right? I have to my right fee schedules of some competitor banks that I look at, and I'm just like, how could anybody that doesn't independently wealthy or has great backing manage these fees? And it's not just the front end fee. So here's a fee for being cannabis. Here's a fee for our compliance. And then here's what we're going to charge you at minimum to move your money. And then here's what we're going to charge you per $1,000 you deposit. And as somebody that's especially social equity or small businesses, you know, non-MSOs, you know, MSOs, we love them. They have a place. Like Target has a place in this world. But boutique shops have a place in this world. We need them all to succeed. But when we price them all the same, it feels exclusionary. It cuts people out and doesn't allow them into the game, right? So the level of cost changes the economics for small businesses, not necessarily small or large businesses. If our social equity operators are priced out by compliant banking costs, the industry is going to undermine its own equity goals, right? We're not going to have the mom and pops. We're not going to have the Black and brown communities represented. We're going to have a very standardized, you have to have 12 shops and we only work across 6 states. And that's not what we want. Again, those have places. We have great MSO clients. We want them in the ecosystem, but we also want equity and we want people to be able to, that aren't that, to succeed. So cash risk is something we talk about, right? We have heavy cash. Cash-heavy operations create safety risks for owners, for employees. It makes payroll, vendor payments, all these things harder. You gotta track them. You gotta watch them. You gotta know what's happening. Banking's not just a convenience. It's obviously the bridge to the Main Street economy, right? If we didn't have banks, how would your cash get into the ecosystem? How would you pay your vendors? So we know we're needed as banks. And then as banks, we know we have a compliance burden, right? So what's the real compliance burden on the bank, right? We have enhanced due diligence. We have ongoing monitoring, BSA AML controls. We have a SAR process, SAR narratives. And traditional models require several dedicated BSA AML staff members, right? So I don't know what market you're in, but for us, if we were to hire enough BSA AML people here in Minneapolis, call it 4, and it would be anywhere from $220,000 to $260,000 in overhead of people to manage this process and get us through. And that's why we went with a little different model. And I'll get to that here in a little bit, but our objective is simple. It's not easy, but lower the cost without lowering the standard. Now, what do I mean by that? Our objective wasn't to become just the cheapest bank around. That doesn't, driving price down doesn't make you better. It was to prove that we could be cannabis compliant, we could be affordable, we could be sustainable, and we could have clients' costs, we could drive clients' costs down without reducing oversight. We want to create room for the family-run, social, equitable operators, so they can have staff, marketing, growth. We want to build a stable deposit base for us. Let's get selfish a little bit as the bank, right? We want to build a stable deposit base on our end. Why? Because we also want to lend to these operators. And, if we keep fees down, we don't have to offer interest, which keeps our cost of funds down, drives that spread wider, because cannabis loan is a little more tricky. There's a little more compliance. So instead of a 6.5% to 7.5% loan, we can do 8.5% and 9%, but also not go into that 12, 13, 15. I mean, we had one guy come to us with 27% interest on a loan. We don't want to do that. We want to set good parameters and allow people access to capital by using the money we bring in. Not paying interest out by reducing fees. I see a lot of banks will charge high fees, but they say, we'll give you 1.5% interest. Well, it's still net negative for that client to even though you're getting interest, the fees outweigh that. So aligning pricing with real compliance and cost, and not just opportunistic pricing. What we did when we set our model was we took our third-party fintech, we took our cash services, and we took our staff, and we weighed that on what is our break even. That's going to be different for every bank, right? But how many cannabis clients at a certain dollar amount, you got to set that for your institution, do we need to make zero? Once we make zero, everything over top of that is cake, right? So we were lucky enough as we started to build this out. We were one of the first 2 banks in Minnesota to start in cannabis. We started with medical here, and we obviously through that have a big MSO as a client. That already got us pretty far up the scale. So what did we need to add on top of that to break even, and then where we start making money? And you guys have to do your own cost analysis, get with your CFO or your controller, whatever that looks like. But it's doable to find out what's the break even. So if we're going to do the third-party fintech, that's going to cost anywhere from $60,000 to $120,000, plus all the compliance fees, the time, the hours, the people. You weigh all that and you come to the break even number, and you build a sustainable business. Now, everything over top of that break even number for us, we've made money on, right? Through transaction fees, through deposit fees, but again, not excessive fees by any means. And if anybody after this call wants our fee schedule for cannabis, please reach out. I'll happily share it with you. We don't make it a secret. I see a few Minnesotans on here. They've all seen it at conferences, at tables. We presented it. So if you want to see it, see what it looks like. Next is governance, right? Governance comes first. So our board, it starts at our board. They do a cannabis training every quarter, so they fully understand this business, so they're not out in the cold. It's nothing crazy. We put it together internally, put it on a little flash drive. We mailed it out. They do it. They certify at the end. They sign a copy, send it back to us. So our board, we have 14-member board. They're all in on cannabis. They know exactly what we're doing, why we're doing it, how we're training it. And then senior leadership team, obviously, I sit in our C-suite with 5 others. We talk about it every single senior leadership meeting. And then the ownership structure matters. We're union owned, and we're very proud of that. And so part of our mission is how do we make jobs accessible and just life accessible to people. I don't know if you know about a lot about unions, but it's the collective we versus the I. You see it a lot in building trades. You see it a lot at like hotels. A lot of hotels you walk into in DC, including the one the PBC is at, those are going to be organized workers, and they bargain together, so they all rise together. And we as a bank, our board, after we went hard into cannabis, wanted to do that for the industry, not what's just good for us, but how can we make sustainable businesses out there? How can we partner with local nonprofits that are helping educate and things like that to grow the industry in Minnesota? Because the more the industry grows in Minnesota, guess what? The more successful we'll be. On the front end, if we're not overfeeing or fee grabbing, that could cause a client to go to business in 12 to 18 months. But if we're not fee grabbing on that front end, they can be a client in 8 years. They can go from a $50,000 depositor to a $10 million depositor. And for those of you in banking, you understand how much that drives your bottom line, especially back to the cost of funds that I was talking about. You have more money to lend out at a cheaper cost. Spread and fees are the only way we make money in banking. Excuse me. So obviously not every bank can be union owned, but every bank can decide how it governs this line of business. You know, other banks can create a board level cannabis committee. You can tie your work to community impact, or you can build it into your small business strategy. But leadership has to treat cannabis as a core commitment, not a temporary fee line. You've heard me say it over and over again. Fees are great. We can grab those fees, but that's not sustainable. So the technology and fintech partnership, we partnered with a third party. I love them, but I won't advertise on your dime, Josh. But there's so many good ones out there. Hopefully you've met them. They all do similar things. They handle the BSA AML side. So they talk to metric. They talk, in our case, to the OCM. It pulls in on the good news checks, the bad news checks. Do they need to update their driver's license? Do they need to get us a new business license? Is their OCM renewal coming up? And it pushes that out to them. And obviously with the link to metric and the link to our deposits, it cross-references it, makes sure all the money balances, and make sure all the product was from seed to sale done correctly. And we know that instantly. If we see something skips a section, we can reach out to that business owner and say, something's off at your business. And we didn't have to do that. We didn't have somebody reading spreadsheets. We didn't have somebody going through the metric data. We have that third-party fintech doing that. And we run a very large cannabis space here in Minnesota. We have 2 people that manage it all. Our chief compliance officer, or not chief, our senior vice president compliance officer, Debbie, who some of you have met at PBC. And then our AVP head of retail, Oliver, who again, some of you have met at PBC. They handle it all, just the 2 of them. And I talked to other banks around here. They think that's insane. But we've had 3 FDIC audits and 2 Minnesota audits that were perfectly clean with just 2 people managing that. So think of that. It could have been $260,000. I won't tell you what we pay because I don't want to mess anyone else's negotiation, but we don't pay anywhere near that. We saved on 3 to 4 bodies, and I think we're more compliant because that third-party fintech with its AI, it's not missing anything, and it's keeping us going, and it makes it super simple. We still have to fill out our SAR narratives, so there's still work. We still have to certify. So Oliver does our first level certification, Debbie does our second level certification, but all the data's there for them to do that without driving cost up. So what it's done for us, that fintechs help us reduce friction and cost, but again, it does not reduce your responsibility. Don't think it's doing the work for you. You still got to do the work. Then program design. Compliance savings were not kept by us. Again, we went back and looked at the pricing model and we did a cost analysis. We are lucky we have a controller and a CFO that can do that. You know, to save money, you could hire a CLA or an RSM or something like that to do the cost analysis for you. What's your break even? Where do you start making money? How do you drive spread on your loans? Sorry, apparently I'm losing my voice here. And then that savings went back into staff and marketing for us. You see us, if you're in Minnesota, you see us all over the place. We're at all the conferences. We can afford to go to all the conferences. We don't have to cut costs. We're out there, right? And lower fees did not just improve the bank statement, but it gave our operators room to grow. We get so many high fives, so many thank yous. I just had a client walk in this morning, just very fortuitously, and said, I just bought a safe, a digital safe that allows me not to have to come to the bank. And I did that with my cost savings. So now, if you guys don't know what digital safes are, he's putting his cash in right at his office. It's going in, it hits our bank today, and then he schedules a pickup. It could be weekly, bi-weekly, whatever he needs for his business. Those pickups aren't very expensive. And then he's not out of his business. His cash is there for liquidity. And he doesn't have to worry about it. He was coming to the bank every single day at the same time. I was like, dude, you are a target. People see you come from your shop straight to the bank. What do you think they think you're doing? And this makes it safer. He's got to get back to open, right? He's the business owner. He can't be coming at noon. He can't be coming at 4 o'clock. They're busy. So this allows him to make sure he has eyes on his business. And so that's just an example of what the result is. A better outcome for the operator is, and a stronger funding strategy for the bank. Then we don't have to count the cash too, right? That hits the vendor, goes straight to the Fed, right onto our balance sheet, and we're never counting it. Takes the stress off our staff, lowers our risk of being robbed. And like I've said over and over again, the lower annual fees have freed up capital for our operator. They just reinvested it in a safe, but we've seen people do marketing. We've seen people do product. And our operators receive access to basic banking without being punished by excessive pricing, and their business has become more financially stable. This is a startup. He's only been in business 9 months now, right? And now he's able to invest in an $18,000 piece of equipment to make his life easier because he's got so much extra capital because we've kept those fees down. So business outcomes. We gained stable, low-cost deposits because that cannabis money comes in and it sits, it buys product. It's coming in quicker than they need to buy product right now. Again, driving our spread up. It's strengthened that funding base. It's improved spread profitability. Cannabis banking is not only about fee income to me. The real business case for me is deposit value, relationship value, lending capacity. If you price the relationship fairly, I generally believe that you can create strong economics through deposits and loan spread. And if you build the fees correctly, you create long-term clients, not 18-month clients, 24-month clients, 10-year clients, 20-year clients. As we continue to grow this business, those are who we want. And again, with the compliance community, that Fintech's going to support you. It helps us maintain all the rigorous oversight. It's more efficient. It's not less compliant, and it's impactful to the work we do every single day. And this is where responsible banking also becomes a community impact strategy for us. That's it. Q&A.
Andrew, that was fantastic. Thank you so much. So I've been taking notes on this, as I'm sure some of the other bankers and professionals on the call. So it sounds like what set you guys apart was your governance. You leaned into technology with fintech partners, your program design. And then as you developed all of these out, actually you started with, fees are not the prime revenue generator for us. It's relationships. And then as you kept building out the program, you continuously went back to those fees and said, hey, how can we pass these savings back on to the customer, make them more successful? And now we have bigger deposits with them. They grow with us, and the flywheel, spins.
Exactly.
So this is brilliant. This is a master class. Thank you very much for sharing this with us. Like you said, I'll open up the floor here and see if we have any questions that anyone has come up with here. So while people are figuring that, I have a question. When did you guys actually get into cannabis? What year was it?
Technically 2014, first account was 2015, January 2015.
Wow. Okay. That is really early on. That's awesome. Good for you. Okay, and that all makes sense because this sounds like you guys have gone through
Yeah.
iterations of learning, improving, putting out the product. Okay, this worked, this didn't, keep refining that flywheel. That's fantastic. I mean, we meet some people, of course, through PBC that have been doing it that long. We meet a lot of new banks or new-ish banks that got in the last 6 years or 4 years or 2 years. So they're all trying to figure out, exactly what you've already worked through. So it's fantastic to hear this from you. So Brandon, what's one piece of information that you would like to share with someone who, there's a bank that's about to go to their board, right? And they want to pitch this. What's something that you think they should know? I know you covered a lot of topics here, but that's question one. And then question
Yep.
two is someone who's actually been in the space for 5 years and they're looking to potentially scale their program. Maybe you have same information or a different piece of
Yeah.
insight for them.
Uh, yeah, absolutely. So board, you want to start a program. It's funny you say that. I just got back from, as I missed all your emails I shared with you this morning, Josh, Graduate School of Banking at SMU, Cox School of Business. And talking through this with bankers in Texas, they wanted to know how do they go to their board. So very, very lucky that you asked this question. And my statement was, why are people on the board of a bank, right? They're a shareholder and they're a major shareholder. What do shareholders want? They want return. Do they want quick return or they want sustainable return? And that kind of goes back to what we're talking about. Fees are great. We do need fees, right? We got to cover costs. That's an obvious. But where is the sustainable money into a bank? And that's in our spread. The further we can drive that spread, right? I mean, you watch the GDP and we're looking at what we're going to do with rates. It's probably going to stay the same. I know that the Fed chair disagrees with that, but he's not the end all be all of that. But driving that spread, so driving your cost of funds down while being able to put a 9% or 10% loan for cannabis. And some of you guys might go higher than that. I get that. That's your prerogative. But when you have an 8% spread versus a 4% spread over on $1 million loan or a $500,000 loan, that makes you a heck of a lot more than $250 in fees. So I would go from the spread angle, the cost of funds angle. The cheaper their money is, the more money the bank makes, right? So when you're talking to senior leadership, or you're talking to a board that wants dividends, it's how can we drive that spread and make it sustainable through a cheap cost of funds is where I'd start. And then somebody looking to scale, it's similar, but it's coming back to how do you keep those clients? Because if you have a high fee structure, you've been in the market 5 years, and then all of a sudden, we'll talk about maybe the bank we just talked about. There's a new bank coming to market. They're going to undercut you. We see it happen in Minnesota. They're going to undercut you because they can, and they need to gather it, and they're not quite sure what they're doing yet. So don't overprice yourself. Price yourself at the break even on the technology is what we did. You can even make some money there, but make yourself competitive, because if these guys are getting $40,000, $50,000 in fees, and then Brandon's bank pops up and says, hey, we can get you in for $5,000 in fees. They don't care about your online banking. They don't care about your relationship. Your relationship's not worth $45,000. None of us are that good. I think I'm a pretty good banker. I'm not that good. I'm not $45,000 good to a small business.
Makes complete sense. Thank you so much for sharing that with us. So guys, I think that will be it. Brandon, do you have anything else you'd like to share as a closing note for me and the audience?
Absolutely. I love this space. It's so much fun. I see a couple people on here I get to run into in Minnesota all the time. Be active in your market. Go to PBC. It's worth it. I'll sell that to Josh. I've loved it. We love it. We have people going back again this year. But be active in your market. Don't make it about you. And by you, I mean your bank. Make it about your community. How can you grow that community? Because the more you grow the community, the more money you will make. We didn't get into banking to not make money, right? We didn't get making to not turn profit, but the better you can drive the ecosystem where you're at, whether it's locally or across the state, the more partnerships you can get, it's just good for all. And when everybody, it's an old adage, but rising tide does what? It raises all ships. So work with your other local banks. We do partnership loans with other local banks in cannabis to make sure cannabis operators get up. We do panels with other banks. Don't silo yourself. Get out there, work with the community sponsors, work with the other banks, work with the people in the community to make the cannabis ecosystem strong, because in the long run, that serves us all.
Excellent words. Thank you so much, Brandon. Thank you for the shout out for PBC. Folks, if you'd like to get in touch with Brandon or myself, we'll share contact information here after the webinar. And we really appreciate everyone for coming out today. And again, Brandon, thank you so much for sharing your wisdom with us today, and look forward to seeing you and everyone at PBC.
Thanks, everybody.